Welcome to the Kapital News. I'm your host, Alex Karitis. Today is Wednesday, December 23rd, 2020. Thank you so much for joining me. The title of today's podcast is A Nation of Debt. Of course, it could be a globe of debt, a world of debt, but we're just going to focus today on the United States of America. Past couple of days, we were talking about the Federal Reserve's balance sheet hitting an all-time high at $7.4 trillion. We talked about that a little bit more in detail yesterday. Podcast ran a little bit longer than we usually run, so I didn't get a chance to talk about a couple other things just to put the Federal Reserve's balance sheet into perspective, because I also wanted to highlight the national debt of the United States of America and also our real gross domestic product, just so all of these things can be put into context, because I can get on here and say, oh, okay, the Federal Reserve's balance sheet hit an all-time high, $7.4 trillion. Okay, that's great, dandy. What does that mean? What was it a year ago? What was it a few months ago? What was it 20 years ago? Let's provide a little context, a little perspective as to what all of this means so we can paint a clearer picture as to what it means and what's likely going to happen. And of course, you can easily find all of this data, and I always suggest that the audience takes the time to look this up for yourselves so you can actually see what I'm looking at. But you go on the Federal Reserve's economic data website, Federal Reserve Economic Data, you Google that, the acronym is FRED, and when you're going to search this data out, all you have to do is type in the word assets into the search bar, and what should automatically populate is something called total assets less eliminations from consolidation. It's a fancy title, but all it is the Federal Reserve's balance sheet, and we're looking at the asset side of the ledger, and you'll see that it comes out to 7.4 roughly trillion dollars. Okay, so I again advise you to take a look at this, because once you see it, you are going to know immediately that something is wrong. This does not look like any type of healthy growth, any type of sustainable system at play here. This just looks like a bunch of crap. That's really what it is. It's and no disrespect to any toddler, but it just looks like they're doodling something, like they're just making it up as they go. It's some sort of abstract drawing. That's all it is, and that's exactly what these idiots at the Federal Reserve are doing. They're just doodling. They're just making this stuff up on the fly. Oh, well, they come up with a fancy name. They want to call it quantitative easing. I say, oh, well, that's not enough. So we have QE1, which was about $1 trillion, as we talked about yesterday, back in the depths of the great financial crisis. Well, that got us so far. And I said, oh, well, I guess it wasn't enough. We got to do it again. So we get quantitative easing number 2. Well, do we have to do it again, or can we come up with something else? Because these guys are always about propaganda. They're always about marketing and rebranding something. So they say, oh, well, instead of doing quantitative easing number 3 right off the bat, let's do something called Operation Twist. And then we'll see how long that lasts us. And that only got us so far. And they said, well, let's finally concede to it and give in to the markets. And let's give in and let's say, okay, now we're going to do quantitative easing number 3. And we hold on for a while. And we get up to $4.6 trillion, which is where we were on the Federal Reserve's balance sheet. And we start to taper off because we're supposedly in the greatest economy ever in the history of the United States, which was bogus, but that was the story. So if we're ever going to leave these programs of quantitative easing, if we're ever going to start to taper off, if we're ever going to get back to some semblance of normalcy with respect to what the Federal Reserve's balance sheet used to look like from the prior 100 years, well, we got to get this number down, I don't know, 2 trillion, maybe even 3 trillion if you want to be nice to them. Well, the best they could do was 3.7 trillion. That's how low they were able to go before everybody threw a hissy fit. And then over the course of a few short months, that number doubles. And we're at 7.4 trillion. And as I stated yesterday, a very important law within the realm of economics is diminishing marginal returns. So a decade ago, in the depths of the great financial crisis, they could say, okay, we're going to buy a ton of government debt in mortgage-backed securities, because that's what really comprises the asset side of the ledger with the Federal Reserve. That's what they typically buy. And of course, now they're buying everything, but that's what they really started buying. More government debt and mortgage-backed securities. And they did so to the tune of $1 trillion. That calms the markets down. That they, okay, Ben Bernanke's in charge. He was then the chairman of the Federal Reserve. Okay, these guys, they got a plan. They got a plan. Let's give them the benefit of the doubt. Okay, they're doing something. They're throwing a lot of money into the system. They're trying to get a lot of liquidity into the system, calm things down, get everything moving, get back to normal, right? Okay, let's see what happens here. Well, it only gets so far. And that's why they had to do QE2 and Operation Twist and QE3, and then just keep more propaganda. Just keep that spinning going. Keep the spin cycle going. Make stuff up. Let Wall Street understand that the Federal Reserve has your back. If there's a dip, we're going to come in and buy stuff. Well, that's what they've been doing. This is supposed to be the best economy ever. Then why do we need all of this extra stimulus? Why do we need all of these trillions of dollars sloshing around through the economy if everything's fine? If you can run the race, you don't need crutches. But nobody asks these questions. And now, because of diminishing marginal returns, you could do $1 trillion a decade ago and it could get you something. But now $1 trillion, it just doesn't buy what it used to. So they had to increase it. Over $3 trillion over the course of a few short months. And this is because of two reasons, in my opinion. One, as I just stated, because of the law of diminishing marginal returns. You're not getting as much bang out of every buck, so you had to throw more bucks into the system. And then secondarily, it's all about consolidation, it's all about control, it's all about power. And governments rarely miss the opportunity to take advantage and to exploit a crisis. Never let a crisis go to waste. Well, we have a pandemic. We have an economic collapse. We have a pandemic, the likes of which we haven't seen in 100 years since the Spanish flu. So surely now we can do things. We can justify the unjustifiable. We can get away with printing trillions of dollars. And who gets it first, folks? The government gets it. Major corporations get it. Banks get it. Big banks get it. You understand? Follow the money. Ask who benefits. Rules of the Cynic. In our book, The Cynic's Guide to Investing. Who benefits? Follow the money. There are, of course, a handful of other rules, but those are two of the biggest ones. And they've been around for a very long time, and they stand the test of time because they work when you ask yourself those questions. Who benefits? And follow the money. Where's it going? That's what this was about. Part economics, diminishing marginal returns, and the other side of it was political. It was cronyism, nepotism. It was theft. That's what this is. With our money, by the way. This is why you have people talking about this K-shaped recovery, whatever letter you want to give it. You have those at the upper echelons of society doing fairly well. Billionaires adding what? Another $1 trillion to their net worth. In the midst of one of the largest economic contractions ever. You do the math. Well, we just did. And if you look this up, you can see it for yourself how ridiculous this graph is. You say, oh, well, they printed a few $1 trillion. Where did it go? Well, we know where it went. And it's not going to the tens of millions of Americans who are unemployed. It just really isn't. It's not going to all of those small businesses who are just grasping at straws at this point, where we know that of those remaining small businesses, 50% are likely going to close their doors for good if they don't get some other round of spending or stimulus from the government. And the sad thing is about all of this, a lot of these businesses actually have to go out of business. That's the sad thing in all of this. But despite the billions and trillions of dollars thrown into the system for the purpose of, supposedly, at least this is what we're told, of keeping these businesses alive, well, they're not getting it. We know in the Small Business Pulse Check that we did a couple weeks ago through the SBA, the Small Business Administration, we know that most of that money, the PPP loans, did not go to these smaller businesses. It's not how it worked out. And now we're supposed to believe if they can get their act together and pass another round of quote-unquote stimulus, that this time everything's going to work out. Well, it's not. That's ridiculous. That's the definition of insanity. So now we have the showdown of $600 stimulus checks, now $2,000. Will they get their act together and vote on this? Who knows what they're going to do. But this is just a country that is in decline, and it's in rapid decline. And it's not just the United States, it's the globe. It's the entire planet right now. But this is just ridiculous. This is the management of the bankruptcy of the United States of America. That's what we are in the midst of. And to be honest with you, that's what we have been in the midst of for quite a while. It's now just getting really real because of the restrictions, the shutdowns, and everything else that has been taking place this year. And next year is likely going to be worse than this year, at least economically speaking, because nothing structurally has been resolved. Tens of millions still await evictions. Tens of millions are still in food bank lines. Tens of millions are still on unemployment. You can't just throw more money at this problem, at these structural issues, and expect them to be solved, expect them to go away. That's not how it works. Because if it was, then as I stated yesterday, why $2,000? Why not $20,000? Why not $100,000? That would really solve the problem then, wouldn't it? If it was that simple. There is no free lunch. The government doesn't have this money. It's printing it. And remember, there is no more a destructive or devastating form of taxation than that of inflation. And the mere fact that they are increasing the money supply, and we talk about this every single week, that by definition is inflation. And everybody knows the true costs of living. 60-some% living paycheck to paycheck, we know the numbers. People don't have $400 cash in the event of an emergency. This was before COVID-19, the $400 cash in a case of an emergency. Paycheck to paycheck, 40-50%. Now it's over 60%. It's getting worse, not better. And unfortunately, things are likely going to get worse before they get better. And as we talked about this a couple months ago, a little bit of a history lesson as to what the politicians and central bankers did 1929, 1930 with the stock market crash in the beginning of a recession. And it would have been a serious recession. No question about that. But it did not have to turn into the Great Depression, but it did because of their actions. How they intervened, and a more appropriate word would be how they interfered with the market system. The market system comes down to the pricing system. Allow prices to adjust so that markets can clear. And let the chips fall where they may. That's the correction. That's a good thing. There's too much debt. There's too much waste. There's too much malinvestment making its way through the system. So allow market forces, through price discovery, cleanse the system out. That's how it's supposed to work. We still had free market capitalists in this country early 1920s, which is why we rarely ever hear about that Great Recession, that depression. It's the forgotten depression because the government didn't interfere. It allowed market forces to correct the problem, and it did. But that wasn't to be the case. Late 1920s, early 1930s, they interfered. And by their actions, they created the Great Depression. And what we have done earlier this year with the Nobody Cares Act and a whole host of other programs, and what we continue to do now with Nobody Cares Act 2.0 and a $1.4 trillion spending bill just to keep the lights on for a few months, is going to cause more problems next year and the year after, really for the remainder of this decade. We are repeating history. We are doing the same thing and expecting a different result. Again, the definition of insanity. So it's no surprise when I say that we are in the greatest depression, why I am saying that. I'm not just saying it to get ratings. I'm saying it because it's based on history. So the Federal Reserve's balance sheet, as we stated, our analysis in conjunction with a handful of others out there are thinking that by this time next year, if not sooner, the Federal Reserve's balance sheet will be $10 trillion, which will be about 50% of U.S. GDP. Astronomical figure. And we're very likely going to get there. And it very well may be worse than that. So you have from the inception of the Federal Reserve, 1914, when they opened their doors, to 2008, the depths of the great financial crisis, a balance sheet of $1 trillion. Fast forward to where we are today, and where we're likely going to be a year from now, if not sooner, at $10 trillion. That's an increase of tenfold in just a little over a decade's time. Wouldn't you like to increase your assets tenfold over the course of a decade? Well, if you had a printing press, it'd be quite easy to do it, wouldn't it? Now, a little bit of another history lesson. Don't you think, here in the United States of America, with all of the wisdom of our founding fathers, don't you think that if they thought it prudent to establish a central bank, that they would have done so? But they didn't. I wonder why. Banks weren't new in 1776, 1789. Banks have been around for a long time. Our founding fathers were very well aware of banks, how they operated, what they did. Even central banks. So don't you think if it was a prudent measure for a young country that they would have included the establishment of such an institution? And the answer, of course, is yes, they would have had they thought it was prudent. But they knew that it wasn't. Our government is a powerful government. Yes, there is a federal government, so there is some form, some semblance of central authority. But they wanted it broken up into pieces. They wanted some semblance of decentralization. Because they knew and understood history. They knew and understood the nature of government, that it is an institution of force. And force does not mesh well with freedom and individual liberty. So it needed to be limited. There needed to be checks and balances. And so they established the executive branch, the legislative branch, the judiciary. Each having a lot of power so that each could check the other branches. Congress can pass legislation, but the president can veto such legislation. The president can veto said legislation, but the Congress, with 2/3 majority, can overrule the president. If Congress should pass something that someone deems it unconstitutional, that case can be taken to the Supreme Court, which can determine, yes, it is unconstitutional. It is no longer the law of the land. Yes, Congress can go back and amend it so it becomes constitutional, but that's the process. That's how it works. Our officials are elected. They can get kicked out. A president can be impeached and removed. Checks and balances. Our Bill of Rights. The right to bear arms. The right to free speech and a free press. To ask questions of those in power. To keep them honest. To keep the citizenry informed as to what our government is doing, what they are up to. Genius. Beautiful. Not perfect. There is no perfection. But beautiful. Genius. Where's the Federal Reserve in all of this? Where's the central bank in all of this? It's not there. Well, then it pops up. 1913 opens its door in 1914. 1913 is also the year of the federal income tax, by the way. This is not a coincidence. No checks and balances. These are not elected officials. The people don't put them into those seats. They cannot remove them. There is no accountability. There's no responsibility. Sure, there's quote-unquote oversight. The chairman of the Fed gets called up to Congress every once in a while to testify, what are you doing? But Congress, especially nowadays, because we're in the midst of a bankruptcy, well, we'll just keep the money printing going because there's no way I want to go back to my constituents and say we screwed up. Can't keep these promises. It's unsustainable. No. Keep printing the money because I don't want to go back and tell them we got to raise taxes either to keep paying for this stuff that they say they want, but they don't want to pay for. So keep the printing press growing. Keep the inflation up. I mean, this has been admitted by previous Federal Reserve Chairman. Alan Greenspan comes to mind. That no matter his relationship with any member of Congress, Speaker of the House, the most powerful of senators, the president himself, doesn't matter what they say, doesn't matter what they want. When we make a decision as the Federal Reserve Board, that's it. That is not what our founders had in mind. That is not what they envisioned. It is clearly against everything this country is supposed to stand for. And if you ask somebody, what's the Federal Reserve? Most people don't even know what it exists, let alone what they do. And that's somewhat funny because the people in the Federal Reserve, they don't know what the hell they're doing either. This is why that institution has to go. It has to be abolished. That's why the federal income tax has to be abolished. All of this nonsense needs to be financed. Well, take away the bank that's doing the financing and they can't get away with it. Get rid of the federal income tax, what they just take out of you. You got to work 3, 4, 5 months, depending on your income. All that just goes to the government. You might as well not even take a paycheck home for the first 3, 4, 5, 6 months of the year. Just give it to Uncle Sam because that's what's going on. That's not freedom. That's not freedom. That's not how this country is supposed to operate. You want to solve problems, that's what you have to do. The rest is up to us. It's not for me to have a 50-point plan. Here's how you run energy. Here's how you run healthcare. Here's how you run ba. That's not my job. It's our job collectively as entrepreneurs, as workers, to solve these problems, as American citizens to solve these problems. Not as a government. Government doesn't solve these problems. Government is the problem. Government causes these problems. Look at these graphs. It proves it out for you. So now if you want to look at the national debt of this country, $27.5 trillion. All right, well, what does that mean? Put some perspective, right? We have a $4.5 trillion deficit this year alone. That's the deficit this year alone. How long did it take us to have a $4 trillion national debt? You got to go back to the Clinton administration. So from George Washington all the way to Slick Willie Clinton, 1990s, 1993, and everything, the whole history of the United States, everything that we incurred, everything that took place between George Washington and Bill Clinton, our national debt was $4.2 trillion. This year alone, we added that much to the national debt. We are rapidly in decline. This is what happens. You can have compounding interest work for you with sound, prudent investments, or you can have it work against you with incompetence and poor fiscal planning, which is what we have been doing. But that seems to be the coward's way out, the easy way out. Just print the money, just inflate it all away. As opposed to having a real concrete plan of action, something that can work. Might not move as fast, but it's steady as she goes, and it's real. It's not an illusion. It's real. That's what we have to adopt. But it might be too late. But there's $4 trillion national debt all the way. You got to go back to Bill Clinton. In comes, excuse me. Next, we get George W. Bush. First quarter of 2001. We have a national debt of $5.7 trillion. By the time he's out, first quarter of 2009, right? We are at $11 trillion. 5.7 to 11 trillion. So George Bush and company just took a wrecking ball to this country. And of course, that was the beginning and in the midst of the great financial crisis too, right? Then in walks a young, charismatic Barack Obama. Walks into a national debt of $11 trillion in 2009. He leaves, and he's gone. First quarter of 2017, right? Well, now we're at $19.8 trillion. So he adds more than what Bush did. In fact, Obama added more debt to the system under his watch. Of course, he didn't do this by himself. This was in conjunction with the idiots in Congress, Republicans and Democrats alike. He added more in 8 years than what all the other presidents did combined. That's a profound statement, but that's what happened. So $19.8 trillion when, what's-his-face, Donald Trump walks into the Oval Office the first quarter of 2017. Well, where are we today? $27.5 trillion. So we add another $8 trillion right there. It took Obama 8 years to do what he did. It took Bush 8 years to do what he did. Trump, 4 years to add $8 trillion to the national debt. And again, this isn't all on him. This is Democrats and Republicans alike. Nobody's stopping this. Nobody's saying turn the boat around. Nobody's even saying stop. This is why you can't vote for these people. This is why you cannot support them. This is why you cannot defend them. And now we get a handful of jokers in the Republican Party primarily, right now, who are all of a sudden concerned with the national debt. Am I supposed to believe them? Am I supposed to take them seriously? Am I supposed to give them the benefit of the doubt and say, well, better late than never? Give me a break. The Ted Cruzes, the Mike Lees, the Rand Pauls, where have you been for the past 9 months? Now all of a sudden you're concerned with everything. Elections are over, now you don't seem to care. I'm not buying it. I'm not buying it. Rand Paul wants to come out with, his Festivus, happy Festivus, everybody. Well, this is the government report. This is the way, some $54 billion. $54 billion? We spent that much money in this past half hour of this podcast. $54 billion. What about the $4 trillion? This is laughable that we're supposed to take that seriously. Well, the government waste, the Festivus report of $54 billion. That's nothing. That's a drop in the bucket. That was spent, I'm telling you, during this podcast. And then, of course, if you look at this graph, the national debt, and you look and it's posted up against various recessions over the past several decades, you start to see, especially in the last few recessions, you start to see an increase in the slope of the line, which just simply means the rate of increase to the national debt is increasing. Great financial crisis, yep, it really starts to steepen out. And now, like so many other graphs, during this recession, it's a vertical line. Just like it is with the Federal Reserve's balance sheet, our national debt is also a vertical line. It's straight up. And then, of course, if the U.S. national debt clock is correct, and of course, they're just using basic math. They're just saying if everything maintains its current pace, its current rate, 4 years from now, another presidential cycle, under the idiot Joe Biden and Janet Yellen and Jay Powell and who else ends up in the Federal Reserve, we're going to have a $49 trillion national debt. So everything, that's another $20 trillion. Maybe a little more. Took this country almost 300 years to get to that figure. Now we're going to do it in 4 years. This is the rapid decline. This is why we are a first world banana republic. This is unsustainable. This is not healthy, and we're going to continue to do it. Now, could the U.S. debt clock be wrong? Yes, but not because of their math. The math is what the math is. Could they try to rein in spending? Should they try to get these things under control? Of course. Is that likely going to happen? No. No. But what I can tell you, which it's almost a guarantee, is that by this time next year, if not sooner, we will have a $30 trillion national debt. Once you start to get to these numbers this big, it becomes very difficult to understand what they mean. It becomes very difficult to manage them. And it becomes laughable, really. Well, why not 50 trillion? Why not 60? If nobody's dead, if everybody's fine, then why not make it more as much as possible? Because then we can just print the money and put it in people's pockets. Again, why 2,000? Make it $20,000 checks or $100,000 stimulus checks, right? What's the big deal? That's where we are. Nobody cares about the principle. As long as we can get money in our pockets, that's it. Sit down and shut up money. That's all it becomes. So I just want you to understand, I just want you a little bit of history here. Where were we a decade ago? Where were we 20, 30 years ago when Bill Clinton was in office? $4 trillion. National debt. We did that this year alone in our national deficit. This is the power of compounding interest working against us. And who has to pay the price, of course, is, yes, the current generations, but really younger generations and those yet to be, who have absolutely nothing or very little to do with this monstrosity. They can't vote. They didn't put these politicians in there for 30 years. A lot of these people aren't even 30 years old. Yet they're the ones that have to pay the price. It's immoral, it's unethical, it's un-American, and our founding fathers knew it. Because this is not a difficult concept to understand. What debt is. It comes from the future. And yes, there might be times in this country's history where you had things working in our favor. The world was blown to hell after World War II. We were really the last man standing. We had most of the world's gold. Those with the gold make the rules. We had favorable demographics. And we had a country to build from coast to coast. Well, we don't have those types of favorable demographics anymore. We didn't have the welfare state. So there was a lot of growth opportunity. Now everything's getting saturated. because we're a welfare state. It's that barbell strategy, if you will, but with welfare. Welfare for the lower class, if you will, and welfare for corporations. And it's squeezing the middle class to death. That's what we are in the midst of. We are in the midst of the greatest depression. We are in the midst of the bankruptcy of the United States of America. It's perfectly evident to me, looking at these charts and graphs, looking at all of the data that we talk about here all the time. It should be perfectly evident to you. Do not get caught up in the circus, in the noise of Washington, D.C., in all of the shiny objects and the bells and whistles that they got going off to keep you distracted. Because that's what they want. They want you distracted so they can run away with the trillions of dollars that they're printing. Stay focused. And more importantly, have a Merry Christmas. So I'll probably be off for the next couple of days. I imagine you will be too. Stay safe. Have fun with your friends and family. And remember what Christmas is all about. So Merry Christmas. And I'll be back in a couple of days. Stay diversified. Stay vigilant and stay with the Kapital News. I am Alex Koritis. Godspeed.